All right, good morning, trade pros. Welcome to our morning market update for this beautiful Friday, May the 15th of 2020. Hope you guys are having a great day. We got a lot to cover today. Some important economic data came out. Quiet overnight session until this morning, and then we got a little bit more news flow. Actually, until the European hours, really, things started to pick up. Just adjust the camera. All right, so let's get started with this. Yesterday, we had pretty much a textbook play of what we were looking for. We were looking to open up a little bit strong and sell the rallies. We sold them all the way down. And then around 10:30, the common time of reversal in the morning session, our team turned around and started to get long. Love that we had the strongest number in the room all week, all month, actually. So it was a great day. All right, in today's session, there's some news flow that's pushing the downside on equities. U.S. is moving to prevent Huawei from acquiring technology, semiconductors, and chipsets made by U.S. software and technology. Okay, Commerce Department said that they're going to extend it for a final 90-day period, and then they are no longer extending it. And then Hu Hijin, who then tweeted, he said, based on what I know, if the U.S. further blocks key technology supply to Huawei, China will activate the unreliable entity list, restrict or investigate U.S. companies such as Qualcomm, Cisco, and Apple, and suspend the purchase of Boeing airplanes, which I'm sure they've already done. And so now it kind of seems like we're back to 6 months ago with this trade war situation on top of the coronavirus. And so there's a more doubt that's overshadowing the market heading into a weekend. And it's hard to imagine professional institutional traders wanting to add to their position going into a weekend where there's ruffled feathers on Friday morning. Okay. And that's what's driving the downside news flow. Doesn't have to be any more complicated than that. Here's a few U.S. companies that would probably see some selling today based on the fact that they have a huge exposure to this Huawei situation. Neophotonics, which got a 50% exposure to Huawei on their revenue. All right. Momentum, Corvo, Finizar, and Skyworks are the top five biggest companies, but by far the biggest is Neophotonics, and you can see here how big it is. That little line, that's massive. Okay, it's almost 50% of its revenue. So that's a company to watch for as this unfolds. All right, some of the bigger names have exposure to Microsoft, Intel, Western Digital, Texas Instruments, NVIDIA, Micron, AMD, Advanced Micro Devices. All right, but they have a small exposure to it as a total revenue. The revenue is well diversified and won't really impact them as much. All right. So in other news this morning, before we get into the retail sales figure that just dropped, all right, the New York Stock Exchange is reopening their floor for a select group of brokers or a subset of all the brokers. They're not all coming into the pits, but they're opening their trading floor on May 26th. All right, that's after a shutdown for coronavirus due to social distancing. Brokers will be required to wear masks and follow strict social distancing requirements, and they'll be encouraged to avoid public transportation. All right. Not sure if that's enforceable, but will be encouraged and will be screened and have their temperatures taken when they enter the building. So the floor is reopening in the New York Stock Exchange. And they said, why wouldn't they just do it remotely rather than functioning in person? New York Stock Exchange President Stacey Cunningham said it's because recent data demonstrates that our trading floor saves investors millions of dollars each day by making transactions rather more efficient. Yeah, Stacy, I'm not going to comment. But hey, look, the brokers got to have a chance to make some money too. All right. Yesterday was a historic day. Fed bond buying program is coming at, or was launched yesterday for the first time. They bought $305 million of exchange traded funds. All right. It was revealed in the central bank's weekly balance sheet update yesterday at 4 p.m. We told you about that to watch it into the close. All right. Also showed total assets of the Federal Reserve balance sheet has gone up to a record $6.93 trillion. All right. You guys remember in September of 2018 when they started unwinding the balance sheet at Trade Pro Academy? What were we saying back then? Saying, look, they're going to unwind a little bit. The market's going to crash and they're going to start buying again and expanding their balance sheet. The only reason they were unwinding is to have more space to provide more liquidity when the right time comes or when it's needed. It wasn't an unwind of the balance sheet because they wanted to do the fiscal responsible thing. They wanted to have some firepower for the next war. And now coronavirus came a little bit sooner than expected. As soon as they started cutting their bond portfolios and offloading their balance sheet, stock market nosedived. Donald Trump went and tweeted right on Christmas Eve, says, the best time to buy stocks. and that marked the low of that year. Up we went. All right. Now we're at 6.93 trillion. It was 4 trillion before when they started unwinding. All right. So at $7 trillion versus 4, it's almost a 40% expansion pre-cutting on their balance sheets. That's massive amount of money circulating in the economy. Okay. Now they're doing bond buying programs by purchasing ETFs in the secondary market. You want to know the symbols for what they're purchasing? They won't tell you yet. They said that they'll disclose the data of which ETFs they bought. It'll disclose the names at least once a month. Okay, but I think they'll rotate bond ETFs. Corporate bond ETFs is what they're trying to purchase. They'll rotate them, but there's not that many of them. So, if you want an insider tip, here it is. It's not that much insider anymore. The Fed is buying corporate bond portfolios on the ETF front. Find a couple of those names, have a look, see if there's an opportunity. If not on the ETF, maybe on the call option side. Who knows? All right. Just not right now. I think trade's a little bit overdone. Give it time to settle in. Okay. In today's markets, in Asia, Japan's up 0.6%. Hong Kong is flat. China's flat. India's flat as well. In Europe at midday, London had a 1.4% rally. Paris up 0.9. Frankfurt up 1.7. Overnight in Germany, pretty bad GDP print, down 2.2%, minus 2.2, in and around the expectation. So it didn't quite get as bad as the low end of the expectation at 3.4, but still not good. So you add in the Huawei, you add in bad GDP data, all right, out of Germany, and Germany officially had the largest decline since 2009, all right, and that's what's putting on some negative flow here into equities. I didn't put this on the notes, but because I was actually trading this morning's retail sales. So let me turn my back to you for a second, but I'll still talk to you. At 8:30, had retail sales come out at minus 16.4. All right, expectation up here was minus 12. Okay, that was as expected. The low end of the range was minus 20. So we came in worse than expected, but not as bad as it could have been on the low end of the expectation range. That was still bearish for equities. If we hadn't been trading near the overnight low on this Huawei news, we would have broken the overnight low on this report, but we didn't. And so what we were doing here early on, I was talking to the team and our Discord channel before we opened up the trading room, saying, look, sell these 16, 17s, even the 15s, and cover them down near the overnight lows. What you want to do, if you look at a level here, is if you're short above, you don't want to wait for it to break. When it's trading at the level, it looks appealing for a breakout. Okay, but what you want to do is actually start buying before it breaks and then leave a trailer through that level. Very important lesson. I can't stress that enough. A lot of people look at a level and say, okay, I'm going to take profit near the level, wait for it to break because they start getting greedy, it reverses, and they lose all their profit. You have to get paid before a key level hits and not anticipate a breakout. You don't know if it's going to break or not. You're not trying to guess. You're trying to do your job. Your job is not guessing. It's managing risk. All right. The risk management trades always cover right above an overnight low. That's what happened on retail sales. You had a few chances to try that on the pushes down, and now we're starting to break some of the structure. We're too close to the open right now to really mess around with it. All right. So retail sales came out pretty bad. New York Fed manufacturing wasn't as bad as expected. They expected a minus 63.5 print. Came out at minus 48.5. All right. That's where we were at. The prior number was minus 78.2. So those manufacturing numbers aren't as bad as they were before, and less bad or not worse than prior is actually good in today's era. Okay. Markets overnight, they had some gains. Crude oil is picking up some steam, up 3.6%. Went up to as high as, what did it go as high as right now? 29.05 actually, it looks like. Nah, that's not right. 28.95. Just have to really zoom in. All right. It opens near its overnight high and a little bit of a sell-off here. So crude's picking up momentum. Market's getting a little bit more balanced. Okay. In today's session, 9:15, we will have industrial production, 10 a.m. business inventories and consumer sentiment, and job openings and labor turnover survey, JOLTS. All right. That's coming up top of the hour. Busy Friday for news. Then 1 p.m. Baker Hughes. That's going to be your oil report. All right, for offshore drilling in the U.S., and then 4 p.m. TIC, Treasury International Capital. So, you got some news events at the top of the hour. I think we're going into the close of a week that was rather bearish. I could see a little bit of a push to the downside early on, and then maybe some buy stops getting triggered, and we'll see what happens in the close. Every single day you trade, you have to realize there's actually 2 sessions if you're a trader in the U.S. or trading North American markets. What happens between about 9:30 a.m., maybe even 9, you could take that time period, to 11:30, and then what happens from 1 to the close. Those are the 2 sessions. 2 different sessions, 2 different outcomes and things to watch for. All right, YouTube, be safe out there. Enjoy the rest of your weekend, and we'll see you guys on Monday for another round of morning market update. And you guys have a great weekend. Be safe. Manage your risks today. Trade like a trade pro, and let's finish out the week strong. Love you guys. See you next week. Take care. Goodbye. All right, let me get in here. Morning Dan on YouTube, Varillo, Craig, Angela. Hey, Daniel LaRue. Can you please, email support and I'll get Donna to help you out. If you sign up, she probably hasn't had a chance to put it in yet, but we'll get you in there if you just send email support at tradeproacademy.com. All right, brother, and we got your back. You're welcome. Ad, Rillo, Jeff, Will, Thiago. You guys take care. Let's do this. Have a great rest of your day. Bye. Boxy, let's get you on here for oil. And then we're going to send it back to Vicky for equities, give us some levels and trade ideas. I just rocked the day. I'm excited. I want to have a nice strong one. And then wrap her up for the week. There you go, sir. I'll make you host. Stop the screen share, and let's rock and roll.